Welcome back, everyone. Ready to dive into something really interesting.
Definitely.
Today we're looking at, well, it's a book all about treating psychology
Oh, interesting.
and market dynamics.
Okay.
You know, those forces that can really make or break you when it comes to trading success.
Yeah,
And I think we're going to uncover some really cool insights
I think so.
to help everyone listening
Yeah,
better understand kind of what's going on beneath the surface of the market.
absolutely.
So what do you think? Is this going to be a good one?
Oh, this is going to be fascinating, especially because the author
Okay.
has this really unusual background.
Okay.
He's actually a psychiatrist
Really?
who got into trading and
Wow.
he started to see all these parallels
Oh, interesting.
between therapy and
Right.
trading.
Huh. So right away,
Yeah.
we're not just talking about charts and indicators.
No.
We're talking about the minds of traders.
Yeah, exactly.
That's what I love about this show. You know, we get to explore all these different angles and perspectives.
It's true.
So, okay, the big idea here that this book is really pushing is that psychology
Yeah,
is like the secret key to succeeding in trading.
it really is.
You know, winning traders, they've mastered their emotions, whereas those who lose, they kind of let those emotions run the show,
Yeah.
right?
They get the best of them.
But it's not just about, like, you know, keeping a cool head when things get crazy.
Or-
There's got to be more to it.
Well, there's definitely a deeper level here.
Okay.
One thing the author really drives home is this idea of like
Okay.
trading with your eyes wide open,
Okay.
seeing the market as it truly is,
Mhm.
not as you wish it would be.
Right.
And sometimes the truth is, it can be pretty brutal.
Ooh. Okay, now you've got me really curious.
Yeah.
How brutal are we talking?
Brutal, like the author straight up calls the market a minus-sum game.
What does that mean?
So that means that it's designed, essentially,
Okay.
for most traders to lose money. And not just from bad decisions either.
Oh, okay.
There are these like built-in costs, commissions and
Okay.
slippage
Right.
that are like almost invisible enemies.
Uh.
They're constantly taking little bites out of your profits.
So wait, even if I'm like making good trades,
Yeah,
these hidden costs can still chip away at what I'm earning.
it's true. And it can be a little unsettling.
Yeah, it's a little unsettling.
Yeah, the book uses this comparison, kind of stuck with me.
Okay.
Imagine you're swimming in this like beautiful lagoon, right?
Right.
But it's full of sharks.
Right.
Every time you get in or out of the water,
Right.
every time you make a trade, those sharks, they take a bite.
Yeah.
And even if you're a strong swimmer, those bites add up.
Yeah, they do.
Oh,
Ouch.
yeah.
Yeah. Okay, that analogy paints a vivid picture.
Right.
So commissions and slippage, those are like the sharks.
Exactly.
Tell me a little more about how those actually work, because
Sure.
I think I might be underestimating their effect.
Well, I mean, commissions are pretty simple.
Okay.
It's just the fee you pay your broker for each trade.
Right.
But slippage, that can be sneakier.
Oh, okay.
Let's say you want to buy a stock at $50, right?
Right.
You put in your order,
Yeah.
but by the time it actually goes through, the price has moved.
Okay.
It's now $50.10.
Right.
That 10-cent difference.
Yeah.
Slippage.
Oh, I see.
And it happens because prices are constantly moving up and down,
Yeah.
especially in a fast market.
Makes sense.
So, one trade, 10 cents, no big deal.
Right.
But hundreds of trades,
Yeah.
that adds up.
Oh, yeah, like death by 1,000 cuts.
Exactly.
You don't even realize it's happening until it's too late.
That's the thing.
Is there an example from the book that really shows this in action?
Yeah, there's a good one.
Okay.
The author talks about a trade in the gold market
Oh,
where, the winner, they made less than they thought they would.
wow.
And the losers lost even more, all because of those hidden costs.
Right.
So it shows how important it is to really consider these
Yeah.
when you're thinking about your profits and your losses.
Absolutely. You got to factor that all in.
Yeah.
Okay.
I see the whole picture.
So we're swimming with sharks.
We are.
We got to watch out for those costs.
Yeah.
But what about us?
Right.
What about the trader?
Yeah.
What does this book say
Yeah.
about the kind of mindset we need to
It
have
says a lot.
to survive in this environment?
Definitely.
So it really does dig into the mindset.
It does.
And it's not just about being good with numbers
Right. It's not just about being a math whiz.
or having nerves of steel.
Yeah, you gotta have more than that.
So what does he say? What are the traits?
Well, he really gets into it.
Yeah.
Because remember, he's a psychiatrist, right?
Right.
So he's looking at those deep personality traits.
Okay.
And what he finds is that the traders who are successful,
Mm-hmm.
they're hardworking.
Okay.
They're shrewd. They're open to new ideas.
So they're always looking for that edge.
Yeah, they're always looking for an edge.
Always trying to improve.
They're driven to improve, yeah.
I like that. That makes sense.
Yeah.
But I'm guessing there's another side to this coin.
Oh, absolutely.
What about the people who don't make it?
Well, for some people,
Yeah.
the market becomes like a stage
Okay.
to play out their own internal struggles.
Interesting.
You know, they might be impulsive,
Mm-hmm.
they might chase losses, they might even sabotage themselves
Without even realizing.
without even realizing it.
Wow. So their own psychology is working against them,
It is, yeah.
even if they understand the market?
Even if they get the market, yeah.
That's really fascinating.
And he tells this great story about a day trader
Okay.
in Texas
Okay.
who's reached this point
Yeah.
where winning doesn't faze him, losing doesn't faze him.
He's just totally detached.
He's so focused on the process
Wow.
that the money doesn't even matter to him anymore.
That's incredible.
It's
It's like he's reached some sort of like Zen state.
like a Zen trader.
But I imagine it takes a lot of self-awareness to get there.
It takes a ton of self-awareness.
And discipline.
Yeah, tons of discipline.
Okay, so we've got to manage our own emotions,
Right.
but then there's this whole other level
There is.
of the psychology of the market crowd.
Exactly.
Okay, tell me more about that.
So think of the market as this giant crowd.
Okay,
Every price movement
yeah,
represents the consensus of that crowd.
okay.
And just like any crowd, the market is vulnerable to these waves of emotion.
Oh, so like fear and greed,
Fear, greed, hope, despair,
all of that.
all of that swirling around.
So when you're trading,
Yeah.
you're basically trying to predict the mood of the crowd.
You are. You're trying to anticipate
Yeah.
how those emotions will move prices.
I see. And this book, does it draw on any other research on crowds?
It does. It mentions some classics,
Okay.
like Charles Mackay's book.
Extraordinary Popular Delusions in the Madness of Crowds.
Oh, I've heard of that one.
Yeah, it talks about all those
Like the Tulip Mania.
Tulip Manias, South Sea Bubble.
Right, those historical examples.
Yeah, where crowd psychology
Yeah.
creates these crazy bubbles
Yeah.
and then they burst.
It all comes crashing down.
Exactly. And one of the big takeaways from these works
Okay.
is that people actually change when they're in a crowd.
How so?
They become more credulous,
Okay.
more impulsive, more emotional,
So they're not thinking clearly.
not thinking clearly, just going with the flow.
So it's like the market can hijack our rational brains.
It can, and that's why a trading plan is so crucial.
Yeah, it's like your anchor
It's like an anchor
to keep you grounded.
keep you grounded when the storm hits.
Okay, so we've got to have a plan.
You need a plan.
But how do we actually use these insights about the crowd
Right.
when we're trading?
One way is to watch how emotional the crowd is
Okay.
and see how that shows up in price movements. So like those sharp rises and sudden drops.
Exactly. That often means the crowd is reacting out of fear or greed.
Got it. So it's like taking the market's temperature.
Exactly. You're taking the temperature.
Are things getting too hot or too cold?
Are things getting too crazy?
Yeah. Is there panic in the air?
Yeah, is there panic? Is there euphoria?
I see. And the book also talks about technical analysis
Yes,
as a way to study the crowd.
it does. It sees technical analysis
Okay.
as a way to understand crowd behavior.
Interesting. So those chart patterns,
Mm-hmm.
support and resistance levels,
Yeah.
volume, open interest.
All that.
Those are clues
Those are clues.
to tell us what the crowd is thinking.
Exactly.
So it's like learning to read the language of the market.
That's a great way to put it.
And what's really cool is that the book says
Yeah.
support and resistance levels, they're not just random points on a chart.
No.
They represent where the crowd's emotions are concentrated.
Yes. Where those memories
So,
of past wins and losses are influencing decisions.
so those levels are like psychological battlegrounds
They are.
where the bulls and the bears are fighting it out.
Exactly. And the outcome of those battles
Yeah.
determines where the trend goes.
Wow. Okay.
Yeah.
So it's not just about identifying those levels on the chart.
No,
It's about understanding what they mean emotionally.
exactly. You got to understand the emotional weight.
But how do we know if those levels will hold or break?
That's the million-dollar question.
Right.
Right. That's where the art of technical analysis comes in.
Okay.
You can use chart patterns, volume analysis,
Mm.
all those indicators to try and gauge the strength,
Yeah.
but it's not